please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. We thought we would greet you with all these bites, but there is one tweet that overshadows what I'm calling it is Urjit Patel giveth, but Trump taketh. I think that the Trump quote is very important. That's President Donald Trump. In the light of China's unfair retaliation, I have instructed the USTR to consider whether $100 billion of additional tariffs would be appropriate under Section 301 to identify the products upon which to impose tariffs. So that's taken the Dow after a fairly decent 240-point rally to a minus 350 when I last checked. That's the Dow Jones futures. So I think today we will have to contend with that. Hong Kong is up, but that's because they missed yesterday's trading. The other markets are down, and that will cast a shadow. But my sense is that Indian bonds have enough spunk left in them. So at least even if we are down, we may be outperformers in today's trading day.
Hi Lata, hi Anuj. Even on the global markets, there has been a recovery from the lows. The Dow futures early in the morning was down 440 points. As we speak, it's raised some losses, currently down about 270 points. The SGX Nifty is also mildly lower, and that's pretty much the picture across the rest of the Asian markets. While there is nervousness that the showdown between US and China could enter round two, with US Donald Trump, as Lata pointed out, instructing the trade representatives in the United States to consider $100 billion in additional tariffs. But Asia is mildly lower this morning. Anuj, for our own markets yesterday, in the morning, it was about the global cues, the steady global cues. Towards the end, it was the RBI policy which gave us the late push. How do you sense trade will pan out today?
Yeah, morning, Rima. Two or three things. Yesterday was a gap up which was worth chasing. There are some gaps that you chase. Yesterday was one of those gaps because you had both domestic and global cues supporting the market. Normally, because we are still not in a runaway bull market, after a trend day yesterday, the market could be a bit more sideways. Also, yesterday was essentially short covering. If you take a look at what happened from the FI side, especially, they covered about 16,000 index shorts. They're still sitting on 80% shorts, so the possibility of incremental short covering is still there. But one more thing is that this is not a market which is conducive for positional traders. For last 2 or 3 days, positional traders have been trapped. You take a long, next morning you have a gap down. You take a short, next morning you have a gap up. So either you are an investor and you just forget about all the noise, or you are a day trader, because this market is giving you opportunity in either direction almost every day. For today, you'll need to wait for dip to buy. I think the SGX Nifty was actually giving a good indication. I mean, if that was the actual start, it would have been a good dip to buy. But now that's no longer the case. So now you're opening, I think, almost in the green. The good point now is that you have a sacrosanct stop if you are a long trader. What's that stop? 10,227 thereabout, which is the 20 DMA, and also yesterday's low. So that becomes your initial support to work with. It boils down to risk reward. On the bank Nifty, in the morning, it may not be in your favor to take fresh long after a 700-800 point rally and 630 point rally, and almost 200 points out of that came purely on expiry factor, 3 p.m. factor and the policy factor. So what you do is you wait for a 200 point dip on the bank Nifty. Reasons could be any. The dip could come, and perhaps at that point try to take a buy. Also, not a market in which you want to leave positional calls open overnight. If you are doing that, then you'll have to take some hedges as well in either direction and take it day by day. You have technical analysis, you have fundamental analysis. You'll now need to invent perhaps a tweet analysis of Donald Trump. So that could be the new science in stock markets.
We should add him to the list of macroeconomic risks, Trump tweets overnight. But Lata, more on the policy fine print. Yesterday, the banks rallied, the bond markets rallied. More juice left?
I would think so. And that's because of the series of give-ins from the Reserve Bank. After being extremely austere in the first quarter, what we've seen, whether it was NP or whether the way in which they approached the bond markets and chiding the bankers for taking exposures. Now it's a given. First, they gave in on the provisioning for bond MTM losses. Then there was a bit of a given for NCLT cases. You don't have to provide 50%, provide 40% and 10% later. And yesterday you had that Ind AS, which is also getting postponed. Perhaps, you know, Ind AS itself was largely expected. But this dovish policy sits very in sharp contrast to the language used by the Reserve Bank in the February policy. I mean, what happened in 60 days that you cut inflation forecast by 50 basis points, half a percentage point? Even that can be taken because there was a big surprise in food prices and the way they trended. But the second half, we still have a lot of uncertainties as to how MSP will be calculated and how seriously states will implement it. I mean, if it is a simultaneous poll, then state governments also will have, you know, a skin in the game. And they could implement it well, and there could be, therefore, fiscal slippages. All these become important for calculations, and to boldly go and say that I expect an inflation of 4.4 was something the market was clearly not prepared for. And mind you, in the second half is when you're going to have a larger borrowing program because we have cut the first half. So all that could make second half a little difficult. But for the moment, the party is on. Yesterday, when the stock markets closed, the bonds were still at 7.18. You know, they'd fallen from 7.28 to 7.18. After that, there was a further rally taking it to 7.13. And there are people in the street freely talking about 7%. So my sense is there is still, for the moment, enough to enjoy, both in bonds, PSU banks, NBFCs.
Yes, bond yields have corrected nearly 65 basis points from its recent peak, and at 7.13, it sits at a 4-month low. But Lata, what is consensus now saying? Are we in for more rate movements towards the end of the year?
No, the language at the moment clearly says there is no rate hike up until March. But the governor put one very important caveat, and we should remember that I am data dependent. So, you know, if the MSP numbers are actually implemented, in India, the record of implementing MSP is not very good. So if it actually gets implemented and if CPI goes up, then he'll change his mind in August. He can change his mind in October. And that's how central banks should be. The only thing I object to is this volatile changes from in 2 months. But central banks should be data dependent, and this one will be. So at the moment, if you look at the language and their projection, and you should respect their projection, you think that there is no rate hike for the next 12 months, maybe even 18 months. But, you know, data can change it.
Okay, we'll be tracking the data, but for now, let's tell you what our wise experts have to say going into trade this morning. Neelkan Mishra of Credit Suisse believes bond yields finally following the term premium has corrected, but it is still elevated, with states expected to borrow 1.2 trillion in the first quarter of FY19. There could be some volatility as policy push gets over and some until clarity on repo rates emerges. Credit Suisse believes that while the move downward is seen to be positive for NBFCs as a group, their underweight on the sector was despite anticipating lower yields. They prefer to be more selective with an outperform on Shriram Transport, and they also like State Bank of India.
Okay, and time to get you some money market views. Bhaskar Panda of HDFC Bank says ramifications of escalating trade war between US and China are omnipresent. There seems to be a little breather, which has helped risk sentiment across. In India, a dovish policy and global development helped USD INR pair close below the 65 per dollar mark yesterday. He says he's expecting a range of 64.80 to 65 to play out.
On the bond markets, he says RBI's dovish policy statement helped the Indian 10-year benchmark yield to push lower. Technically, support stands at that 50% Fibonacci level at 7.09%. He does not expect that number to break. Hence, today's range could be within 7.1 to 7.15%.
Okay, let's go across to Nigel then for the world view.
Well, overnight, the US markets, they did quite well. All three frontliners, they in fact ended with sharp gains. We had a good bounce that we saw on Facebook, Netflix, as well as Amazon. So those were the leaders in yesterday's trading session. Well, in terms of economic data, the weekly jobless reports, that didn't come out. In fact, the claims came at around 240,000. That's a tad bit higher than what the street was working with. But remember that still the jobless claims are at the lowest levels we have seen in the last many decades. Today, all eyes were going to be on the non-farm payrolls data. Economists, they're expecting an addition of around 195 to around 198,000 in terms of total jobs. But remember, suddenly this morning we wake up to cues that the Dow futures is down more than 200 points odd. That's because President Trump is considering $100 billion in terms of additional tariffs against China. So that's really what spoiled the party, and that's why the Dow future should come up for you. That, in fact, is indicating a bit of a softer start for the US markets. Well, shifting our focus to European markets, they had a very, very good run in yesterday's trade. They were up between 2 to around 2.5%, but economic data didn't look that good. The PMI services number in the United Kingdom, that was a tad bit lower because of weather conditions as well as weak consumer demand. And also the German new ordering, those in fact rose by around 0.3%. That as well a tad bit lower than what Wall Street was working with. Well, this morning, the Asian markets are more or less sideways. We have the Japanese index. That's moved into the green. That's because the yen has moved above the 107 odd mark. A weaker yen is good news for exporters. And in fact, the other market is the Kospi. That's trading with a bit of a cut. But remember, there are a whole host of Asian markets that are shut today. The SGX Nifty, though, that's trading, and that's indicating a bit of a softish start. Back to you.
All right. Thank you very much for that softish. Not as bad as it was about half an hour back, Nigel. So that's good news. Let's get back to the big story of the morning. In fact, big story for some days now. The Reserve Bank's dovish policy stance. Sameer Goel of Deutsche Bank joins us on the phone line to outline the impact on the bond markets as he sees it from his perch in Singapore. You're away from all the noise, Sameer, and you're looking at the stance of the RBI more clinically. What's your take? We've already had a good rally yesterday from 7.28 to 7.13. More to go?
Yeah, hi. Morning, Lata. No, look, I agree with most of what you had said just preceding these comments. I think RBI, just like a lot of other central banks around the world, remain very data dependent. I think to some extent, and this is, I think, not just a comment for RBI, but again for other central banks, have to contend with not just what is immediately in front of them in terms of the growth inflation mix, but obviously the implications of the broader sort of global thematics as well, and in particular with the trade tension narrative, which I think is making everybody a lot more cautious about going those additional steps on policy just immediately. I think what RBI has done is adjusted its inflation trajectory to what has already been realized. And like you said, and I agree that it remains very data dependent in terms of where the huge parts of uncertainty around various factors feeding into the inflation outlook is concerned. Stands also ready to change its stance in the event that that inflation was to turn out to be higher than what is projected. So I think to a large extent for us this was not a surprise. Was RBI has reiterated and I think has come across as a central bank which is very comfortable with the status quo, is comfortable with being, for now, given its assessment of where data is and will be in the near term, happy to be on hold. Our call has been and remains that they will probably only start hiking rates early next year. But then we recognize, just like for other central banks, that there's always a risk that if the data was to turn more aggressive earlier, that they might have to bring forward some of that tightening. The markets are already pricing in some probability of a hike over the next in fact, slightly over more than one hike over the next 12 months. So I think the market is very sort of very comfortable in its pricing of some bit of tightening.
Okay, so one rate hike possible in the next 12 months. Hi, Sameer. Good morning. What about on the yields? What's your own trajectory? Do you see it drifting below the 7% mark?
No, for us, I mean, the yields have obviously of late gapped in very quickly. Firstly, obviously, out of the supply response from the government in terms of the adjustments which had been made to the borrowing calendar, which clearly were sort of more supportive than what one had anticipated. And then, of course, in response to RBI yesterday, which in particular their inflation trajectory adjustment has been seen as or as was read as being quite a dovish guidance. And I would agree that bulk of that adjustment to that term premium is really done. Now, one can never really discount and overshoot in markets, but I would think that given at least our assessment of, the pickup in growth trajectory and where we see policy heading out into 2019, I think we are at, I would argue the markets have now much more fairly priced in both the technicals and the fundamental macro outlook.
Okay. Well, we can't let you go without asking you about the global scenario as well. These are still trade noises. You know, every day you have some tweet and things go berserk. But you always find support at lower levels in equity markets because the bite is not as bad as the bark. Do you think all this is important for fixed income and FX traders in India?
No, absolutely it does. I think obviously a little bit more second order. I mean, I think the first point of content for most in India is that given that there is a far lesser dependence on trade outright, that India should probably be less sensitive to a lot of these global moves. But do remember that it's while as an economy not quite as dependent upon trade, it certainly is very dependent upon global capital flows and the financing on the balance of payments. And to that extent, anything which takes the risk sentiment particularly to the more negative side, I think the problem here, like you referred to, is that there is a lot of noise in this whole trade narrative with very little underlying trend which the markets can necessarily trade to. But if this were to turn to being more negative and was to escalate, then I don't think the Indian markets can ignore the same either.
Okay. Personally, when will you sell Indian bonds? At 7.1 or will you wait for 7?
Yeah, I think it's a little bit less about the level and numbers. As you can imagine, there is not a huge amount of difference between a 7.1 and a 7%. I think there's a little bit more about the wider band of uncertainty which at the moment we have around both the macro picture in particular. I think what had caused some bit of volatility was the shift in technicals, which I think has to a large extent normalized after the supply response. But I think the macro fundamentals will need to be seen as how they evolve.
All right. Sameer Goel, always a pleasure speaking to you. Thank you very much for making this unscheduled stop.
It's time now to drill it down to individual stocks. This is CNBC TV18's top 10 list of stocks to track for today. Good morning, guys. Anuj, what do you have?
So, sugar is not healthy for you. So, Balrampur Chini, it's in a confirmed bear market. Ended at lows yesterday in a strong market, and it's a perfect stock for the bears. Every time you have a gap up, you sell this stock and you make money. Cycle has done, no doubt about it. This stock at some point is headed back below 50 or 40, wherever, of course, sugar cycle settles. Also, researchers say that liquor in moderation is good for you. So perhaps United Spirits. In fact, liquor stocks could dominate today. There's a very good set of numbers from GM Breweries, which we'll, of course, talk about. But it's a stock which is made up technically double bottom at 200-day moving average and has seen quite a bit of buying. So that would be interesting. So
India is the country with the largest number of diabetics, by the way, I believe. Okay, policy impact, banks and NBFCs, like I explained, after the market closed yesterday, there was another 6-7 basis points fall in government bond yields. And therefore, I wouldn't be surprised if Mr. Trump allows that there could be a little bit of more leg up. This is not Nifty Bank. Nifty Bank has only 3 public sector banks, SBI, BOB and PNB. So Nifty Bank is not the one that will respond. It will be the PSU banks and the NBFCs. So mid-cap index is likely to get a boost because of this. But Sapna will join us shortly and she will have much more good news for banks. Okay, Sapna is there. All right, Sapna, tell us, you picked up something on NPA provisioning.
Morning, Lata. So the sense that we have got from the government, and this is from senior government officials, that some relaxation or some changes in the NPA circular that somewhat we had reported a few days ago, that's very much in the pipeline. We try to understand what may be the timelines for the same, today, tomorrow, few days. So the sense that we were given was that definitely this month. Now, on what lines can it come? One aspect we already reported earlier was regarding the one-day default timeline. Would there be something more than that? That is something we have to wait and watch and see how it goes. But it's definitely under consideration, and we can expect an announcement soon, or rather at least before the end of this month.
Okay, Sapna. Thank you very much for that. Let's move on. Indigo
but that's big. I mean, I just wanted to tell you that, the bank stocks have fallen seminally from February 12th. It coincided with the PNB fraud. So everybody thought it was because of the fraud. It was quite clearly because of the higher provisioning and NPA recognition. So any change to that is very good news.
Okay, the other stock which should definitely be in our radar today is Interglobe Aviation. They will not be participating in the Air India divestment. Nigel is here for more on that. Nigel?
Well, the stock stock did well in yesterday's trading session, and post-market hours, what the management has clarified is that they expressed their interest in acquiring Air India's international operations as well as in Air India Express. But they are saying that, in fact, that's clearly not on the government's divestment agenda. So on the back of that, they are pulling out. And in fact, they're saying they're not capable of turning around Air India. So pulling out of, their bid to acquire Air India, that should be taken positively. And I believe the stock should open up in the green.
And that should be taken negatively if you're expecting divestment, because they are the only people who qualified in terms of net worth. Okay, our colleague Utkarsh, who covers CBI and is one of the busiest reporters these days, is joining us on the phone line. Utkarsh, what happened yesterday with respect to the ICICI Bank investigations?
So it was around 6 hours when Rajiv Kuchar was questioned by CBI. It was somewhere around 4. What our sources tell us is Rajiv was at the airport, and there the immigration authorities stopped him and then handed him over to CBI, where he was being questioned at the CBI headquarters in BKC for around 5 hours. Now, what CBI believes is that all the dealings which with the clients which Rajiv Kuchar was doing, which was somewhere around $1.5 billion of restructuring of deals, was being mandated by ICICI Bank. Now, remember that ICICI Bank has earlier clarified their stance in this case, but what CBI at this point of time believes is that there is some role of ICICI Bank to play in these deals, and this is what CBI was looking at. So clearly, 6 hours of questioning from 4 o'clock in the afternoon till 10 o'clock in the night. A bit strange that just in a PE, these amount of questioning has been done. So we will have to really wait and watch, because Rajiv Kuchar's name was anyhow not in the PE as well. And the people who were named in the PE, like Deepak Kuchar and Venugopal Sood, are not being questioned. We will have to see now how the case progresses from now. CBI will have to file an FIR if they have to really go ahead and do any searches and raids. So interesting time. We have to wait how CBI really moves ahead in this case.
Okay, I just want to add 2 things. In Companies Act, in any of them, a brother-in-law is not, considered as close relations whose business interests you have to disclose. I mean, where do you draw the line?
Exactly.
You can't have your entire family not participating in any, and a bank like ICICI will have, everybody as their clients. So does your whole family remain unemployed just because you are a banker? So I'm not, until it is done, it is not done. And ICICI Bank gave a very clear, defense, saying that they have absolutely no dealings with Avista, the company that this gentleman runs. Therefore, this is noise which may keep the bank under pressure, but nothing is done till it is proved.
Oh, yes. And in fact, yesterday we pointed out, Lata, for the last 2 or 3 days, the bank has absorbed stock has absorbed a lot of bad news and has actually moved on. And yesterday it actually ended at high point. And as we discussed in the morning itself, it looked like that, from 269 to 278 on that one. But let's see how it reacts. For now, Sonal, why IOC?
Well, IOC will be in focus because the company has made an acquisition of around 17% participating interest in Mukhaizna oil field, that is from Shell in Oman. Now, the transaction value currently stands at around 2,000 crores, and the company says that the acquisition will enhance their growth in the upstream sector in the Middle East, and this oil field contributes around 13% of the total Omani crude production, and that's why it's important for the company, and it will be in focus today.
All right. Thank you for that, Sonal. Rima, HCL Technologies?
They've made a small acquisition, so they will be acquiring a subsidiary of the pharmaceutical company Merck for a total cash consideration of $60 million. A couple of points. One, this is small compared to the size of HCL Technologies. Its revenues were just about $200 million. And the other problem is its margins are very low. So margins for C3I, which is the acquired company, is at 6% versus HCL Technologies' EBITDA margins in excess of 20%. Also, this acquired company's revenues have been falling for the last 2 years. In CY15, it was close to $220 million, and now it's come down to 200 crores. So it's a small acquisition, but at 5 times EBITDA and single-digit margins, it appears to be a bit expensive. So on the whole, I'll go with a mild red for HCL Technology.
Okay. Ekta, Strides?
Well, Strides and Sequent are going to be in focus today because they both are going to trade X the API business. For Strides, they have demerged the commodity API business, and for Sequent, it is the human API business, which will eventually be merged together and relisted on the exchanges. Now, initially, because of the adjustment, it's up to around 50 odd rupees for Strides, which is expected by analysts. We could probably see red on both these stocks because the API business is around 30% of Sequent sales, but eventually it should be positive, probably because of the fact that margins should improve on a consolidated basis for both these companies.
Okay, so just to put it in perspective, the stock will open in the red because the one business is going out, but that does not mean that it's in the red from the lows actually. Just like you saw with Adani, for example, the stock technically showed you red tick, but from the lows there was a rally. But let's go back to Sonal then for Sobha Developers.
Well, very strong operational numbers from Sobha in Q4. In terms of pre-sales value, it has gone up by 31% year-on-year, and pre-sales volume has gone up around 40%, and this is the highest in last 12 quarters. Even on an annual basis, the value has gone up around 42%. That is highest ever for Sobha. And also in terms of realizations, they have flattened a bit, but the guidance is very positive, where the company says the Bangalore market continues to do well, and the demand is coming back, and that's why going forward they'll be doing more launches, and the pipeline looks very strong for them.
Okay, and then thank you very much, Sonal. For other stocks, Mangalam, you have a couple of them on your radar.
A handful of them, Lata. So we start with Magma FinCorp, the first QIP launched from the financial space in FY19. 500 crore QIP at a price of 155 rupees a piece, which is about 7% lower than yesterday's close price. And after this, their book value increases by 8%. So initially, maybe some adjustment towards the floor price, and then there could be some value buying. Kridhan Infra, they've announced an order win of close to around 134 crores. So we'll watch out for that. PSP projects as well, they've received orders worth close to 87 crores. BILT, Ballarpur Industries, this has been in the works for a very long time. They've finally gone ahead and sold or entered into an agreement to sell their Malaysian subsidiary Sabah, and that is for about 2,100 crores. This compares with their market cap of 1,800 crores and the debt that they have in their books of close to 6,000 crores. So some mild green tick there as well. And finally, Anuj said liquor is good in moderation. So country liquor is what we'll have. Not me. I'm a teetotaler. 11% growth on the revenue, 100% growth on the EBITDA, and more than 140% growth on the net profit.
And it's also good for the shareholders of GM Breweries, up 3.5% yesterday and a 150% rally in the last 1 year. Thanks, Mangalam, for that. A quick recap then of the top stocks that you should have on your radar this Friday morning. In the green could be United Spirits, PSU Bank Index per se, NBFCs like HDFC Limited, Bajaj Finance, India Bulls Housing, L&T Finance. Keep your eye on Interglobe Aviation, IOC, Stride, Sequent Scientific, Sobha, Magma FinCorp, Kridhan Infra, PSP Projects, Build, and GM Breweries. The stocks which could be under pressure today are ICICI Bank, Barrampur Chini, and HCL Technology.